Alright, guys, settle in because what I'm about to show you today could make you rethink everything you thought you knew about XRP. You've probably seen the headlines XRP jumps after a new ETF launch. But the question on everyone's mind is this: the start of a full-blown bull run, or just another short-term spike? Stick around because we're going to break down the numbers, the institutional moves, and exactly why this could be the most critical moment for XRP in 2025. Let's start with the ETF story. A new ETF tied to XRP just went live. This isn't a small deal. These ETFs give institutional and retail investors exposure to XRP without needing to hold the coin directly. And we know what happens when institutional money flows in: liquidity, stability, and potential price explosions. Think about it. Tens of millions, maybe even hundreds of millions of dollars could flood XRP's market in just a few hours once sentiment shifts. But don't get ahead of yourself. History shows us that early ETF launches often cause hype spikes, followed by a consolidation. That means if you bought XRP yesterday because of this news, congratulations, you might see a pop. But the real question is, will this sustain momentum for the long-term bull cycle? That's what we're digging into today. Now, here's the first key thing I want you to note: XRP's current circulating supply, market cap, and liquidity levels. This is crucial to understand why even a relatively small inflow from ETFs could create outsized movements in price. For instance, imagine a $100 million inflow in a market cap of roughly $50 billion. That's nearly a 2% move instantly. And we're talking multiple ETFs, multiple institutions, all potentially buying at the same time. That's why today's numbers aren't just impressive, they're structural. Let me pause for a moment and ask you, are you one of those who's been holding XRP through the dry spells? Type X in the comments if you've been stacked for the long haul. Hit the like button if you're ready to see these numbers explained step by step. Trust me, what's coming next will blow away any casual XRP holder who hasn't looked at these fundamentals closely. Now, let's layer in some macro context. We've got the Fed signaling potential rate cuts, massive liquidity injections on the horizon, and global institutions starting to take crypto seriously. When these macro moves collide with XRP ETFs, the potential for a surge isn't just speculation. It's grounded in liquidity math and market mechanics. I'm going to break down the exact flow of money from retail investors to ETFs to institutional wallets, and how even moderate inflows could push XRP into that $35 range that traders have been dreaming about. But first, we need to understand the ETF mechanics. These ETFs aren't just paper claims on XRP. They're backed by actual XRP in custody. That means every ETF share represents real coins held off exchanges, reducing circulating supply and increasing scarcity. Scarcity plus demand. That's the rocket fuel for a bull run. And that's why some analysts are whispering $3, $5, maybe even $8 as possible short-term targets. Before we dive into the math and institutional flow, here's a quick question for you. If XRP hits $5 in the next 3 months, will you sell, huddle, or diversify into other assets? Drop your answer in the comments. I'll be reading every single one. This isn't just about numbers, it's about strategy. Alright, now let's dig deeper into what these new XRP ETFs actually mean, and why they're more than just headlines. Many people think an ETF is just a piece of paper, but here's the reality. Each ETF share represents actual XRP held in custody. That's real coins being pulled off exchanges. When supply is reduced and demand increases, the only natural outcome is upward price pressure. It's basic economics, but when institutional money is involved, the effect is magnified exponentially. Let's talk numbers. XRP has a circulating supply of roughly 50 billion coins. Say an ETF brings in $500 million of inflows in its first month. That's millions of coins effectively removed from the market. You combine that with retail buying and other ETFs, and suddenly, the free floating supply starts shrinking fast. Scarcity plus demand equals price spikes. It's simple math, yet many casual traders underestimate the structural impact. And here's the kicker: these ETFs aren't limited to small retail investors. Institutional players are jumping in, which means large-scale purchases that don't just move the needle a little. They can push XRP several percentage points in a single day. Unlike Bitcoin, XRP's network is fast, frictionless, and low cost, which makes it ideal for these large settlements. That's why whales and institutions prefer it for liquidity and cross-border transactions. We're not talking about hype pumps. This is structural demand supported by real-world utility. Now, volatility is a reality. Early days of an ETF launch can see swings of 10–20%, sometimes more. That's why strategy matters more than emotion. You can't just chase the headline. You need to understand the flow mechanics. Here's a key insight. If 3 major ETFs launch in the same quarter, all drawing XRP from exchanges into custody, the compounded effect could easily create sustained 5–10% weekly upward pressure purely from structural demand. And that's without even factoring in macro liquidity from the Fed, which we'll discuss later. Retail adoption also plays a hidden role. Many new investors who never wanted to hold XRP directly are now entering the market through ETFs. This opens the door to a demographic that was previously inaccessible. You might think $500 million in institutional inflows is impressive, but retail investors following ETFs can add tens or even hundreds of millions more, quietly strengthening the base for a long-term bull run. Let's visualize this. Imagine the ETF inflow acts like a magnet, pulling coins off exchanges and locking them in custody. Every ETF share issued is a coin no longer available for trading. That means the liquidity pool shrinks while buying pressure increases. Scarcity drives price. It's a self-reinforcing cycle. The more coins that are locked up, the harder it becomes for sellers to move the market, creating a smoother, more upward biased trajectory. But here's where strategy comes in. Not everyone should just buy and hold blindly. Early ETF-induced spikes may create ideal opportunities to scale into a position rather than buying all at once. Even short-term traders can benefit if they understand how these inflows are moving the market. Hedge funds, retail whales, and long-term investors are all competing for the same limited supply, and timing becomes everything. I want to pause and ask you a critical question. And have you set up your strategy to benefit from these ETF inflows? Comment below if you've done your due diligence, set up custody, or planned your entry points. Engagement like this isn't just fun. It helps you and the community think strategically about positioning in this historic moment. Finally, it's worth noting that ETFs aren't just about price. They're legitimizing XRP as an institutional-grade asset. When more ETFs launch, more institutions see XRP as credible, more custodians support it, and more liquidity flows in. That's a cycle that compounds over months, not just days. Today's ETF launch is only the beginning. The potential for a sustained bull run depends on multiple confirmations, structural demand, institutional adoption, and ongoing macro liquidity. And yes, if all these align, the move from $2 to $5 or even higher becomes not just possible, but inevitable. Now let's shift gears and focus on Ripple's big picture institutional strategy, because this is where the real fireworks start to make sense. It's one thing to talk about ETFs pulling XRP off exchanges, but it's another when you combine that with Ripple actively building out infrastructure to support institutional adoption. That's the part that people often miss, and it's not just speculation, it's structural positioning. First up, acquisitions. Ripple has been very strategic over the past few years. Take Hidden Road, for example. This company serves over 300 institutional clients and clears around $3 trillion across all markets annually. By acquiring Hidden Road, Ripple isn't just buying a business, it's buying direct access to a massive flow of institutional liquidity. XRP and RLUSD are now being integrated as collateral for these clients, which means huge amounts of XRP are likely to be held, reducing circulating supply even further. And the kicker, this isn't a one-off play. Ripple is systematically building a network of institutional-grade tools from FX trading to digital asset settlement, and it's all powered by XRP. Next, we've got G Treasury and other acquisitions that bolster treasury management and corporate payments. These aren't flashy headlines, but they're foundational. Think of it like building a highway before traffic even exists. By establishing the infrastructure first, Ripple ensures that when institutional demand ramps up, the system is ready. Every new corporate client, every hedge fund, every bank adopting these tools means XRP is moving off exchanges and into custody or operational use. That's a structural bull case that doesn't rely on hype, it's real-world usage. Let's break down the mechanics. When an institution uses XRP for cross-border payments, it's often for liquidity on demand. They don't hold massive idle balances. XRP flows dynamically across accounts to settle transactions instantly. But here's the subtle point. Even temporary holding for settlements can lock up coins in ways that reduce availability in secondary markets. ETFs and institutional custody work in tandem with this. Every coin that moves into these controlled hands is a coin that's less likely to hit open exchanges, tightening the market over time. Now add macro factors into the mix. We know the Fed is signaling potential interest rate cuts, quantitative easing is coming, and overall liquidity in the market is increasing. Institutions have cash ready to deploy, and XRP is positioned to be one of the primary beneficiaries. Why? Speed, cost, and regulatory readiness. XRP can settle cross-border in seconds with minimal fees. Unlike traditional fiat rails, that's why Ripple isn't just competing on marketing, it's competing on efficiency, which is far more persuasive for institutional money. Let's not ignore network effects either. The more institutions adopt Ripple's infrastructure, the more credibility XRP gains. Once a few major players are in, others follow. Banks and hedge funds are highly influenced by peer adoption. If your competitors are leveraging XRP for cost-effective settlements, not using it could mean higher costs and slower operations. That creates a self-reinforcing cycle of adoption, which is precisely what drives sustainable price appreciation over months and years. I want you to visualize this. Imagine a pyramid where the base is ETFs and retail inflows. The middle layer is early institutional adoption via acquisitions like Hidden Road. The top layer is macro liquidity and Fed stimulus flowing into XRP as institutions and investors chase yield and efficiency. Each layer strengthens the others, and the result is a market that isn't just pumping on speculation. It's moving based on structural demand, efficiency, and strategic positioning. But here's a critical point. Timing matters. These developments don't happen overnight. ETF inflows might be immediate, but institutional adoption unfolds over quarters. Ripple's acquisitions and integrations take time to deliver real transactional volume. That's why we might see phases of consolidation interspersed with explosive moves rather than one continuous green candle. Understanding the rhythm of adoption is key to playing this strategically. So, here's a question for you. Are you tracking Ripple's acquisitions and infrastructure updates as closely as you are tracking ETF inflows? It's not just about price movement. It's about understanding why those movements happen. Comment below if you're following Ripple's institutional plays, and let's build a discussion around this, because the more informed the community, the stronger we all position ourselves. All right. Now that we've covered the institutional moves and the structural adoption story, it's time to bring in the charts and technical levels, because this is where theory meets reality. It's one thing to talk about ETFs and acquisitions, but traders want to see where XRP is actually moving and what that means for potential breakouts or pullbacks. First up, let's look at support zones. Over the past few weeks, XRP has consistently found buying pressure around the 200 to 210 range. That's not random. It's where early ETF inflows and retail accumulation are intersecting with institutional buying. Essentially, these levels are acting like a springboard. Every time XRP dips here, smart money steps in, creating a base of liquidity that can fuel upward moves. For those of you watching, think of it like a trampoline. The stronger the support, the higher the bounce potential. Resistance is equally critical. Right now, 250 to 260 is a psychological ceiling. This isn't just about round numbers. It's where a mix of profit-taking from retail, cautious institutional positioning, and broader market sentiment comes together. The key here is that if XRP breaks above this level with volume, we could see a rapid acceleration toward $300 and beyond. Volume is your confirmation price. Low volume breakouts often fail, but high volume breakouts signal real conviction and coordinated movement. Next, let's bring market sentiment into the mix. Fear and Greed Index is hovering in a moderate greed zone around 60 to 65. That tells us investors are optimistic, but not euphoric. Why does this matter? Because euphoric markets often top out prematurely, and fearful markets can crush momentum. Right now, sentiment is in a sweet spot for a sustainable rally. Combine that with ETF inflows and institutional adoption, and you have a scenario where price action could follow fundamentals rather than purely speculation. Let's talk momentum indicators. RSI has been holding just below 70, which is important. It shows there's room to run before overbought conditions kick in. MACD is bullish with a clear crossover pointing toward upward momentum. The technical picture is aligning with the narrative. ETFs, liquidity inflows, and Ripple's strategic positioning are converging at a moment when momentum can carry XRP higher. Volume patterns are telling us something interesting too. On days when ETFs are listed or highlighted in the news, XRP sees spikes of 20–30% higher trading volume than normal. That's not random. It signals that these events are actually moving the market, not just creating headlines. For traders, this means watching ETF launches and news events closely because they can be catalysts for immediate price action. Another critical layer is correlation with Bitcoin and the broader crypto market. XRP has decoupled slightly from BTC over the past month, showing independent strength. That's huge because it demonstrates that institutional flows and XRP-specific catalysts are starting to outweigh broader market sentiment. When XRP starts to trade based on its own fundamentals rather than BTC correlation, that's when you can see real upside potential and less susceptibility to overall market corrections. Finally, let's look at potential breakout zones. $260 to $2.70 is the near-term level to watch. If XRP pushes through this with strong volume, the next target is around $3.20 to $3.50, 50 cents, which coincides with longer-term Fibonacci retracement levels and previous all-time highs. Beyond that, with sustained institutional flows, ETF support, and macro liquidity, we could be eyeing $4 and beyond over the next several months. Here's the takeaway. The combination of technical strength, ETF inflows, institutional adoption, and macro liquidity creates a stacked deck for XRP. Price isn't moving randomly. It's reacting to real measurable catalysts. For those watching, understanding these layers gives you an edge in timing entries, managing risk, and knowing when to take profits. All right, we're at the final piece of the puzzle, tying everything together and looking at what this all means for XRP holders moving forward. We've seen institutional adoption through ETFs, Ripple's strategic moves, macro liquidity, technical setups, and even independent market momentum. Now, it's time to combine all these layers into a cohesive picture and talk strategy, perspective, and the potential next steps for anyone holding XRP. First off, the ETF launches are a massive game-changer. These aren't just financial products. They're gateways for institutional and retail money to flow into XRP in a structured and sustained way. The market is watching these carefully, and every listing, approval, and inflow has the potential to nudge XRP higher. Combine that with Ripple's acquisitions like Hidden Road and partnerships that bring banking exposure globally, and you start to see how XRP isn't just a speculative token anymore. It's becoming a functional asset in the institutional finance ecosystem. From a technical perspective, the charts are giving us confirmation. Support at $2 to $210 is holding strong. Resistance around $2.50 to $2.60 is next to test, and momentum indicators like RSI and MACD align with bullish momentum, break those levels with volume, and XRP could quickly test $3.20 to $3.50. And with continued inflows and adoption, $4 or higher isn't out of the question over the coming months. The key here is that price action is not random. It's responding to measurable catalysts, which makes this rally fundamentally supported. Now, let's talk strategy. For long-term holders, this is about staying informed, understanding market catalysts, and knowing your entry and exit zones. I'm personally looking at a multi-layer approach, holding the core XRP stack, keeping liquidity available for key breakout levels, and monitoring ETFs and institutional moves closely. Diversification is critical too. Using passive income opportunities, staking, and even other financial products to grow your portfolio without touching the main XRP position. This is the balance between opportunity and risk management. Another big takeaway is market psychology. We've seen sentiment improve after ETF launches and positive institutional news. Fear and greed indices show moderate optimism, not euphoria. That's a healthy environment for a sustainable move. When sentiment is in the sweet spot, rallies have a higher probability of continuation, and crashes are less likely to wipe out progress. Observing how retail and institutional participants interact with these catalysts will be crucial in predicting short-term swings while keeping long-term objectives in mind. Finally, let's be real about risks. Crypto is volatile, and while everything we've discussed shows a bullish trajectory for XRP, nothing is guaranteed. Macro events, regulatory shifts, or unexpected market corrections could change the scenario quickly. That's why maintaining discipline, following a strategy, and understanding both technical and fundamental indicators is non-negotiable. To wrap it all up, the ETF launches, Ripple's expansion, macro liquidity, technical support, and improving market sentiment all point to a strong potential upside for XRP. But this is also a moment to plan, position, and stay ready, not a signal to throw caution out the window. Whether you're holding long-term, trading short-term, or just observing, the next months are going to be critical. And as always, a reminder, I'm not a financial advisor. This is not financial advice. Cryptocurrencies are highly volatile and can lose value quickly. Always do your own research, understand the risks, and make decisions based on your own due diligence. Use this information as a guide to be informed, not as a guarantee of results. So, that's it for this deep dive into XRP's current situation, the ETF impact, technical levels, and strategy. Let me know your thoughts in the comments. What's your take on the ETF launch and where XRP is headed next? Stay alert, stay informed, and keep stacking that knowledge along with your crypto.